And so one of the options in general is that the United States could do kind of a strategic devaluation of the dollar. They could, and one of the mechanisms to do that is to accumulate reserve assets. And then, more recently, there's rumors around that they might add Bitcoin as a reserve asset. That's fairly uncommon. El Salvador has done that to a certain degree. It's not something you see. It'd be considered pretty unusual policy among current central banks.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Lyn Alden discusses the rise of fiscal dominance and its impact on markets in H2 2024 and beyond. Then she deep dives into Bitcoin as a reserve asset, the election impact, what asset classes should perform well over the next 3 to 6 months and more.
One of the easiest mechanisms for them to do that is that the United States already has something like 1% of Bitcoin. They already have over 200,000 coins from various asset seizures, and they periodically sell them into the market. So the lowest hanging fruit, if they wanted to do something like that without being particularly kind of dramatic, is to say, well, we already hold these assets, stop selling them and transfer them over to, where we keep our reserves. So that's one option. The other option is just to outright accumulate them. That would obviously have more impact on price, more impact. It'd be a little bit more of a sensationalist type of event. But in general, I do think that the likelihood of some of these kind of unusual policies, either the U.S. deciding to accumulate reserves in general or, get more into the weeds on currency differentials with some of our trading partners, I think that the likelihood of that kind of increases if we get a Trump presidency.
United States-based spot Ethereum exchange-traded funds, ETF, have returned net outflows of $113.3 million on their second trading day, primarily due to heavy bleeding from Grayscale's Ethereum Trust. 7 of the 8 newborn spot Ethereum ETF posted net inflows on day 2 of trading. The Fidelity Ethereum Fund, FETH, and the Bitwise Ethereum ETF, VITW, led the pack with the largest net inflows, posting $74.5 million and $29.6 million, respectively. BlackRock's iShares Ethereum Trust, ETHA, which posted the most robust inflows out of the group on July 23, only collected $17.4 million from investors on July 24. The new ETF were weighed down by another heavy day of selling from the recently converted Grayscale Ethereum Trust, ETHE, which hemorrhaged $326.9 million in outflows. Launched by Grayscale in 2017, ETHE allowed institutional investors to purchase Ethereum. However, it imposed a 6-month lockup period on all investments. Upon its conversion to a spot Ethereum fund on July 22, investors have been able to sell their Ethereum more easily. In the 2 days following its conversion, ETHE has witnessed $811 million in outflows, meaning that existing ETHE investors have now sold off just over 9% of the fund's holdings. The recent Ethereum ETF performance isn't unprecedented. Spot Bitcoin ETF posted cumulative net outflows for 6 out of 10 of their first trading days, with many blaming outflows from the Grayscale Bitcoin Trust ETF. Notably, Ethereum fell more sharply relative to Bitcoin, which only tumbled 2.6%. This is in line with Kaiko analyst Will K's prediction that Ethereum's price could be extremely sensitive to inflows following the launch of the ETF. Grayscale's ETHE shed $484.4 million on its first day of trading as a spot Ethereum ETF. However, robust inflows across the other 8 products pushed cumulative net inflows to $106.6 million.
So developed markets holding it as a reserve asset is pretty far along the line of success. I mean, overall, the size is also, getting as big as gold or getting as big as kind of the monetary basis of leading countries or getting bigger than any stock market capitalization. Those are also milestones. So overall, that does kind of continue the thesis of Bitcoin becoming increasingly one of the most attractive monies you can hold in the world. I mean, basically, the average developing country currency increases in supply at double digits per year. Like in Egypt, for example, is over 20%, and that's not super uncommon. In developed markets, on average, it's 6 to 9%. Obviously, the kind of the pandemic era blew that out to some extent, but over say the past 50, 60 years, you're generally looking at 6 to 9% supply growth. Gold is something like 2% or less, depending on the given year and the given production cycle, but it's pretty remarkably low at between 1 and 2%, usually around 1.5%, but going as high as 2. Whereas Bitcoin has no long-term supply growth after its initial distribution cycle. It's already lower than gold in inflation as kind of a percent of supply growth now, and I think it's still kind of below its total addressable market for where it's going to get. There's also just in general, like I think that if we removed those factors from the equation, I think probably by late 2025 will be an upcycle in global liquidity, and so that should over like all else being equal be good for Bitcoin. But obviously there are these one-time events or narrative changes that can come into play. Because one way you can think of Bitcoin is if you look at all the properties, they're obviously very attractive. But then what people do is they kind of have like this risk weighting associated. They're like, well, what is the percentage that the U.S. goes after it, or what is the percentage that there's some sort of big technical issue with it, or what's the percentage of X, Y, Z happening? And so Bitcoin is kind of priced like an option in that sense, where anything that kind of removes some of that that tail risk can have a pretty big impact on the price. Because if you say, well, it's already great, but I was worried about this tail risk, and if that tail risk either goes away or gets cut in half, well, then the remaining investment's extremely undervalued. So all of those things are favorable. In general, I start with conservative assumptions of not expecting these kind of like idiosyncratic events, and would be positioned just for a more typical cycle. But then if those events happen, they generally help, increase the odds that you're going to outperform to the upside.
Bitcoin's tumble below the $65,000 mark for the first time in 6 days is likely due to a decline in market sentiment and seasonal trends rather than Mt. Gox's creditors selling Bitcoin. The instant dump you worried about didn't occur. Any price drop would be likely due to market sentiment, not Mt. Gox selling, CryptoQuant founder Kai-Young Ju wrote in a July 24X post. After the Mt. Gox creditors' repayment, all global time zones have passed to added. I think that's FUD. It always has been crypto trader Roman. According to several analysts, the price drop might be influenced by seasonal factors, the spot Ethereum ETF launch, and even political factors. Cane Island Alternative Advisors founder Timothy Peterson linked Bitcoin's underperformance to this time of year, which historically sees weak performance. Our research indicates a consistent trend of underperformance from July 22 to September 22. Bitcoin's seasonal pattern occurs slightly later in the year and is the setup for the frequently occurring October that follows, Peterson added. Meanwhile, Capriole Investments founder Charles Edwards claimed that the launch of spot Ethereum exchange-traded funds on July 23 might also be affecting market sentiment. The whole market would have been better if the Ethereum ETF launch wasn't in 2024, Capriole Investments founder Charles Edwards wrote in a July 24X post. The Ethereum ETF launch has been bad for BTC and bad for Ethereum. Ethereum has been languishing this entire cycle, and now it's muddied the waters at the institutional level with the ETF launch. However, overall sentiment remains on the more bullish end according to the Crypto Fear and Greed Index. The indicator, which tracks market sentiment toward Bitcoin and crypto, reads a greed score of 68, up 7 points in the past week. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.